idea. We're going to talk about our big event that might happen today that could really shake up the cryptocurrency market. An emergency loan. We'll be looking at how this might affect XRP, Ripple, and the crypto world as a whole. Finally, what's the big deal? So picture the situation. And the Federal Reserve decides to print more money because of rising debt and economic pressures. This extra money in the market could cause a huge rise in the prices of cryptocurrencies. Some predictions say that assets like XRP Ripple could see a huge $20 trillion flood in. Sounds crazy, but that's just the world we live in. What are you supposed to do? What does it mean for the price of Ripple XRP? This video has all the answers, so don't worry. Please proceed to the main point. I know that there's a lot of talk about an article from Forbes that's making waves in the world of cryptocurrencies. With its intriguing title of digital assets, this article hints at a huge change that is about to happen. That is the world of digital assets, including XRP Ripple, and could be shaken by a possible bailout. Let's deconstruct it now. Let's say that the Federal Reserve, which is in charge of printing money, decides to speed up their machines again, even though the country's debt is over $34 trillion. And this move, which is sometimes called quantitative easing, basically means printing a lot of new money and dumping it on the market. However, why should we care? According to the predictions in the Forbes article, this could cause cryptocurrency prices to rise at a rate that has never been seen before. Imagine this, putting a huge $20 trillion in things like Bitcoin, ethereum, and yes, XRP Ripple. It's a situation that might start a chain reaction that sends the prices of digital assets through the roof. But what does this mean for people who own XRP Ripple? Imagine being on a roller coaster with thrilling highs and sickening lows. On the one hand, there is the alluring possibility of huge gains for people who already have money in cryptocurrencies. I don't, instead, and be careful. Sounds huge, doesn't it? And this is just the start. Keep an eye out. Let's look into the interesting idea of quantitative easing and what it means in the history of the financial markets. Imagine this as part of its monetary policy. A central bank, like the Federal Reserve in the US, chooses to start a journey known as quantitative easing. However, what does this really mean? Let's put it simply, quantitative easing is a way for central banks to boost the economy by putting a lot of money into the financial system. And in what way do they do this? Commercial banks and other institutions can buy government bonds and other financial assets. The goal of putting this much cash into the economy is to lower interest rates, make it easier for people to borrow money, and ultimately boost growth. And so, what does the market usually do when these kinds of steps are taken? At the start, the prices of many assets, such as stocks, bonds, and yes, cryptocurrencies such as Ripple XRP, easy money and low interest rates make investors want to buy riskier assets in order to make more money. This influx of money into the market can cause a bull run, in which prices go through the roof as a lot of people buy. That's what happened next is important there. And concerns about inflation and the stability of the economy start to show up as quantitative easing continues. Investors worry about what might happen if too much money is printed, which makes the financial markets more volatile. And forget the role of psychology, like the fear of missing out or the herd mentality, which can make market changes very big. So why might quantitative easing, because the prices of cryptocurrencies to go through the roof? It's all about how supply and demand work. The traditional assets like fiat currencies and government bonds may not be as appealing now that central banks are putting trillions of dollars into the economy. When investors want to get away from inflation and economic uncertainty, they look for other ways to store their money. Things like XRP and Ripple cryptocurrencies, because there are many coins to go around and demand as high prices could go through the roof. Do you believe that it makes people more confident in the XRP Ripple? Answers in the meantime, what do you think about that? Please let me know in the comments. Would be interested to know about that. And that's not the end of it. Keep an eye out. The most crazy part of this video is here, and you just can't miss that. Let's talk about what it means that Wall Street ETFs are buying more Bitcoin than the network can make. Let's think about this case. The amount of money that institutional investors, like those in these Wall Street ETFs, are putting into Bitcoin is much higher than the rate at which new Bitcoins are mined. This has never happened before, and it has huge effects on the cryptocurrency market, affecting XRP Ripple in particular. Let's look at what an ETF is specifically. An ETF, or exchange traded fund, is a type of investment fund that holds stocks and other stocks, buy goods like Bitcoin in this case. A lot of different ETF, EFS can trade it because it's traded on stock exchanges like regular stocks. ETFs make it easy and cheap for investors to gain access to a wide range of assets without having to buy and manage each one separately. Yet is, and why is this such a big deal? And in the end, it all comes down to how supply and demand work. Bitcoin works with a set schedule for, as it is planned that there will only ever be 21 million coins. As more institutional investors use exchange-traded funds to put money into Bitcoin, the price of this digital asset goes through the roof. In the meantime, the supply is still limited, and the rate at which new Bitcoins are issued is slowing down over time. This is called halving. This higher demand compared to supply causes a supply shock, in which the Bitcoin that is available on exchanges quickly runs out. There is more Bitcoin being bought by Wall Street ETFs than the network can make. Shows how the crypto market is linked. Changes in one asset can have an effect on the whole ecosystem. First, additionally, the fact that Wall Street at ETs are bringing a lot of institutional capital into Bitcoin shows that cryptocurrencies are becoming more accepted and respected in the world of traditional finance. This newfound confidence could make it easier for institutional and individual investors to use cryptocurrencies like XRP and Ripple more. In short, this is a turning point in the history of the cryptocurrency market, that Wall Street ETFs are buying more Bitcoin than the network can produce. And it shows how institutions are becoming more interested in digital assets and how Bitcoin, Ripple, and other cryptocurrencies could play a big part in the future of finance. Wow, folks, Wall Street investors are about to pump our money. Feeling good about it? Tell us how you feel in the comments. Let's go on. The last few years, institutional investors have become big players in the cryptocurrency market. They have a lot of control over how prices move and how people feel about the market. The move into the cryptos was caused by a number of things, such as the fact that more and more people see cryptocurrencies as real assets. More and more institutions are starting to use them. And they see the chance for big profits in a market that is changing quickly. When it comes to clear regulations, institutional investors have made it clear how important it is for the cryptocurrency market to have clear and consistent regulations. A lot of institutions are worried about regulatory uncertainty, which keeps them from fully participating in the crypto space. Institutional investors put money into digital assets like XRP, Ripple. They face higher risks and compliance issues because there aren't clear rules and oversight from regulatory authorities. So institutional investors are keeping a close eye on changes to regulations and pushing for regulators to be clearer and more open. That would be good for XRP, Ripple, as well as Bitcoin and Ethereum. And they are looking for clear rules from regulators about things like custody, taxes, protecting investors, and stopping money laundering. The rules not only lower the risk of big investors, but they also boost trust and stability in the cryptocurrency market. This brings in more big money over time, which can be used to invest in things like XRP and Ripple. It's impossible to overstate how much institutional money coming into digital assets like XRP, Ripple could affect their prices.